Thank you for joining us today for this driving safety webinar brought to you by ATG Risk Solutions, the leading provider of connected vehicle data and proprietary vehicle safety scoring resources for underwriting and claims for the property and casualty insurance industry. I'm Jim White, Vice President of Marketing for ATG. I have nearly 25 years' experience in GPS, telematics, wireless communications, and most recently, insurance telematics. Joining me via telephone for today's discussion on driving safety and how it impacts your commercial auto insurance rates is Mr. Dave Melton, insurance industry consultant and former managing director of global road safety for Liberty International. An insurance risk management professional with a specialty in driving safety, Dave was with Liberty Mutual for more than 40 years. Most recently, he was responsible for the development, review, and implementation of a roadway safety strategy for Liberty International region operations in Asia, Europe, and Latin America, supporting transportation-related safety and health services delivered by Liberty Mutual consultants around the world. Today, he consults with companies throughout the transportation industry. Now, on with the webinar. We're here to talk about driving risk, how to spot it, how to measure it, how to address it, and how it can impact your company's commercial auto insurance. In 2013, there were 270 million registered vehicles in the United States, accounting for more than 3 trillion miles driven. In that same year, there were 11 million vehicle crashes, causing more than $240 billion in losses. For even the best fleets, the odds of a vehicle being involved in a collision are pretty good. So what can you do to improve those odds? Let's start by asking Dave Melton to tell us more about driving risk. Dave?
Thanks, Jim. It's my pleasure being with you today. Well, here's a bit more data. According to the annual Liberty Mutual Research Institute for Safety's 2014 Workplace Safety Index, roadway incidents were the 6th leading cause of workplace injury, accounting for more than $3 billion in direct losses to businesses. The Bureau of Labor Statistics notes that in 2013, the leading cause of workplace deaths was overwhelmingly traffic incidents. Roughly 40% of workplace deaths occurred in vehicle crashes. In a study of 100 vehicles over a full year, the Virginia Tech Transportation Institute found nearly 80% of the crashes and 65% of the near crashes recorded by the study involved driver inattention just prior to the event. Distracted driving is an epidemic, and we all know it. The VTTI study found fatigue to be a contributing factor in 12% of all crashes and 10% of all near crashes. The study also found 93% of rear-end striking crashes involved driver inattention. All of these are avoidable. Managers now have the tools to identify risky driving behaviors and to mentor their drivers through the use of safety systems that tell the manager how the vehicle is being driven. This data, when used to score driving performance, reveal areas for improvement and opportunities for coaching programs. Managers have the data they need to manage driver behavior. The challenge, though, is to create a company culture where driving behaviors and non-driving behaviors that impact driver safety are reviewed every day. In the past, we had lagging indicators like MVRs and a fleet's own crash data to tell us how our drivers were doing. Today, we have many more tools available. Using technology tools such as onboard devices, we believe that this kind of organizational atmosphere can pay huge dividends. The costs of crashes are not always obvious. The National Safety Council tells us that the average direct cost of a non-fatal crash to the employer is $61,600. In addition to these direct costs, there are indirect costs due to business disruption, employee turnover, associated paperwork and legal expenses, and other hidden expenses contributing to the total cost of a crash. In more ways than one, it pays to mitigate risk and reduce losses due to collisions and at-risk driving incidents. Jim will talk more about that later. The American Transportation Research Institute, the research arm of the American Trucking Associations, has concluded that a significant portion of collisions are triggered by at-risk driver behavior, which includes such actions as driving too fast for conditions, following too closely, failing to obey traffic signals, or other traffic warning devices, and inappropriate lane changes. I don't think that any of those things are surprises to us. On the next slide, there's a chart I put together quite some time ago and have been using for many years to demonstrate how crashes impact the revenue requirements necessary to pay for lost costs. On the chart, on the left-hand column, let's say your lost costs, however you calculate them, in a given year are $50,000. I highlighted that in yellow. Across the top row, let's say you run with a profit margin of 10%, which is very high if you are a commercial trucking operation. To pay for those hits to your bottom line, you would have to generate $500,000 of additional revenue. How many more miles would you have to drive to pay for those losses? How many additional loads would you have to deliver? Or however you measure your business, how many more would you have to do in order to generate $500,000 in revenue? Many fleets are using this chart as an example with their drivers to show that the cost of crashes are not all paid for by the insurance company. Underlying many of these maneuvers by drivers, both young and old, is an increased level of distraction. In 2009, research published by Virginia Tech revealed that drivers who were engaged in distracted activities, such as dialing cell phones, text messaging, or reaching for and or using an electronic communication device, were as much as 23 times more at risk of a crash or near-crash event than a non-distracted driver. All of the above behaviors can be identified and used in your efforts to build a safety-driven culture. Fleets shouldn't wait until a crash so they have something to measure in order to see how safe they are. That's called luck. A safety-driven culture substitutes risk identification and effective training for luck and uses data to reduce the frequency and severity of collisions. Jim, would you like to take over?
Thanks, Dave. Now that we know the nature and scope of the problem, how do we address it? How do we identify driving risk? And what does that risk mean for your business's auto insurance program costs? In addition to the broader economic cost of vehicle crashes discussed by Dave, fleets experience a variety of other costs, hidden losses, if you will, when their vehicles are involved in a collision. If the fleet driver is found to be at fault in a collision and the case is gone to trial, juries often will award large damages beyond the actual losses incurred in the crash. Going after deep pockets is a common occurrence and one reason commercial auto insurance premiums are as high as they are. The cost of litigating or settling a claim can be as much or more than the actual physical damage costs of the incident, but without talented legal counsel, businesses are subject to even more injurious damage awards and settlements. There are other ramifications, too, beyond the physical and immediate economic costs of a collision. Fleet operators may well find the reputation and goodwill they've built among the community and their customers evaporates. Vehicle and driver downtime have a direct effect on the fleet's ability to meet delivery deadlines and customer expectations, with the most dire result being that the customers go elsewhere for their service. So no matter how you look at it, there's a lot riding on a safe fleet. A commitment to fleet driving safety starts with a multi-part strategy to assure that you have the best drivers, the best equipment, and the best practices in place to optimize safety. Good drivers are key, of course, and it begins with hiring standards and processes, including road tests, background checks, and pulling MVRs. Keeping good drivers means providing them with the tools to excel and rewards for a job well done. Driver turnover is high enough. It's time to look at retention strategies which end up being less expensive in the long run and provide you with the safest drivers for your fleet. Equipment maintenance is equally important. Your drivers are doing their part, and you must do yours to make sure that their vehicles are in prime operating condition and not putting them at risk due to faulty tires, brakes, or other components. And a team is only as good as its coaches. Good supervisors implement and reinforce fleet policies, including safety. If you don't believe in and support safe driving initiatives, your drivers can't be expected to, which means that there must be a commitment to safety from the top of the organization all the way through to the maintenance bay and the roadway. A commitment that assures that everyone has the tools, training, and management support to get the job done the right way. One of those tools, which we'll discuss in more detail, is technology. Specifically, telematics. which can record how, when, and where your vehicles are being driven. Telematics is not just about route optimization, timely pickup and delivery, automated job tickets, electronic hours of operation logs, or fuel management. It's about identifying safe and unsafe driving performance and reinforcing good behavior and correcting bad habits. It also takes a commitment of time for training, mentoring drivers, regular driving performance reviews, trend analysis, and more. A successful driving safety program is measured by events that do not happen, and a collision avoided is time well spent. An active driver monitoring program is the only way to know how your drivers are actually performing. Driver supervision is an important part of fleet safety, and there are a variety of ways it can be accomplished. One method is having a supervisor or driver trainer in the cab with the driver. This allows immediate feedback and coaching to improve performance. Driving behavior is certainly influenced by having a supervisor in the cab. Nonetheless, it can be representative of habitual driving behavior or a lack of knowledge or driving skill. This method requires a time commitment by management and sufficient supervisory staff to make it work, but it can be effective. There's also a number of vendors that offer 1-800-How's My Driving observation services, which vary from simple call-in programs to integrated observation and analysis services. These depend on the public observing a behavior and then taking the time and making the effort to call it in. They can identify driving behaviors that may not show up if a supervisor is in the cab and may identify behaviors that won't be captured by sensors. And speaking of sensors, in-vehicle sensors provide continuous, accurate measurement of speed, braking, turning, idling, and hard acceleration, along with the location of all of the vehicles. Data can be stored for download at the end of the day or transmitted in near real time. When coupled with analytical tools that provide indications of how risky behaviors are and that measure drivers' behaviors over time, they give management powerful tools to identify leading indicators, coach to needed changes, and to monitor the effect of coaching over time. Each of these methods shown here, and there may be others, have their advantages and their drawbacks, but it's not necessary to choose only one. The programs are really better together. Safety results don't come from an either this or either that mindset. They come from leveraging the individual strengths of multiple programs. Management teams who integrate data, supervisory coaching, and driver training resources see their efforts translate into real safety results. While it may not be a silver bullet, there is no question that telematics has a role to play in the future of most commercial auto fleets. The data derived from these in-vehicle recording devices can be used to reveal driving risk and reviewed for learning opportunities. Some specific measurements with direct correlation to safe driving include excessive speeding, sharp cornering, harsh braking, and hard acceleration, all of which can be monitored over time to uncover specific events as well as trends. Systems which provide drivers with real-time feedback following a critical event have been shown in numerous studies to reinforce safe driving practices. In fact, a study by the Liberty Mutual Research Institute noted that the benefits of behavior-based safety systems that provide timely feedback based on objective observations include documenting specific behaviors that might lead to crashes, incidents, or traffic violations, thereby providing an opportunity for proactive, corrective feedback, objective, timely, and frequent evaluations. Drivers can receive positive feedback and rewards when the underlying reasons are understood, and those rewards can also be structured to motivate group or fleet-level achievements. Benchmarks for driving behaviors can be set in order to establish carrier or group norms while still respecting the privacy of the individual. Thus, in practice, such behavior-based safety programs should address behaviors directly through feedback and coaching to improve driving performance, and they should also look beyond the behavior itself to identify underlying reasons for the behavior. As an example, let's suppose that an analysis of telematics data shows a pattern of speeding, rapid acceleration, hard braking, and aggressive cornering among several delivery drivers. Looking at underlying causes for the behavior might reveal that senior management has stressed the importance of on-time deliveries and that drivers feel compelled to drive faster in order to meet tight delivery schedules. If drivers perceive that making on-time deliveries is more important than reducing risky driving behavior, then these behaviors could continue in spite of drivers having been provided feedback and coaching to change them. In this case, management directives to improve on-time delivery performance are in conflict with the safe driving message. It comes down to fundamental risk management applied at the level of the individual. Identify the risk, assess the risk, manage the risk. Now I'll turn it back over to Dave for a word about how driving risk impacts insurance.
Thanks, Jim. In my 46-plus years career with Liberty Mutual Insurance and Liberty International, I probably spent hours and hours every week talking with underwriters, trying to understand exactly what they want in terms of a risk management program for fleets and so forth. I want to emphasize that insurance underwriters look at many different factors when establishing premiums for fleet operations. For example, if the bulk of your operations are in well-known litigious states, an example would be South Texas, it's likely your premiums will be higher. If you haul hazardous cargo, the same thing goes. There are lots of other factors that affect how your fleet is rated from a premium standpoint. If you compound those factors with an out-of-control risk management program, your insurance cost will be higher. You'll probably be seen by the underwriters as a less desirable business to insure, and if you're an existing policyholder, your business may not be renewed, or you'll be offered a renewal premium that your insurer knows you cannot accept. There is one more point that I want to make. If you simply base your risk management program on compliance with regulations, that's the minimum an underwriter expects. In this day and age, just being in compliance is not enough. So let me come back to telematics. From an insurance company standpoint, one of the very first questions you'll probably hear from your underwriter will be several of the following. First of all, do you have a formal risk management program? Notice I said risk management program, not safety program. The answer to that one should be yes. Does your program include use of data captured by in-vehicle telematics devices? Hopefully yes. Do you use the data as a management tool to measure how risky your fleet is now? Yes. Do you manage driver behaviors based upon the data? And finally, it seems to me that, at least for the underwriters that I worked with, they seem to all be from Missouri. They all say, show me. Because, and this is a very important point, just because you have the data doesn't mean that you'll use it. Talk with your underwriters and your agents and reach agreement on what they want to see from you. So, if it all looks good, you may get some kind of discount on your premiums. But also don't forget that insurance underwriters and their actuaries use historical loss information, where your fleet operates, types of vehicles, commodities carried, and as I said earlier, lots of other factors to come up with a premium. If you have an effective risk management program, you'll be far better off than your competition. You'll know how good you are now, not last year. You want to be in the top tier of your competition. So let's take it back to Jim.
So now let's crawl into why an insurance company may be interested in your fleet's driving data. In interviews last year with 35 top commercial and personal lines auto insurance carriers in the U.S., ATG discovered 3 common core needs. First, insurers want a standard that can be applied across their book of business. Regulatory filings demand that all policies be rated in the same fashion. Thus, a data-based ratings program requires a data standard that applies equally to all applicants. Second, carriers want a trusted safe driving score that's the basis of rating similar companies. The equivalent of a credit score, a safe driving score provides a quick insight into driving risk. Lastly, insurers want data to be transparent and portable. The fleet customer should be able to view the safe driving score and the supporting data in order to be able to self-monitor and improve safe driving performance. Transparency and the ability to port a fleet score from one carrier to another will encourage customers to participate in usage-based insurance programs for the benefit of everyone. So how do you use telematics to your insurance advantage? The good news is, as a telematics-equipped fleet operator, you already have the technology installed in your vehicles. It's simply a matter of leveraging those devices and the data that they can provide to improve safety and share those documented improvements with your insurer. At ATG, we've created a scoring standard that insurers can use to assess driving risk and formulate a more accurate policy rating and price. It begins with what we call Route Safety IQ, insight into where your fleet stands on a comparative fleet safety index. Downloaded to a smartphone, the versatile Route Safety IQ mobile app records vehicle identification numbers, mileage, vehicle condition, and garage location information, and computes driven safety risk based upon key performance factors. This is the core data that any insurer needs for more accurate underwriting and pricing. Route Safety IQ goes far beyond basic smartphone data. This driving risk assessment tool factors in the driven environment for the whole picture. Commercial auto insurers get complete, verified information on every vehicle and a relative safety index score for the entire fleet. Business fleet owners, operations directors, safety and risk managers can analyze their driven risk, see where safety improvements can be made, and understand how their safety score impacts their insurance rates. This free app helps fleet managers benchmark their safety performance and generate a safety index rating. Using the Route Safety IQ risk calculator, the fleet operator simply inputs the estimated number of harsh braking events, their hours of operation, and average speed over peer speed, and the app approximates where the fleet stands within a driven environmental safety index, a scoring standard that insurance companies use to rate and price risk. If the fleet owner chooses to incorporate the fleet's telematics data, we can expand the safety ranking to show how the fleet compares to similar fleets and get a more definitive driving safety score. These results can also be shared with your insurance company to see how your safe driving may impact your insurance rate. As an added benefit, ATG's exclusive Safest Route Selector lets fleet managers see the road ahead and choose the safest route based on historical road and traffic conditions and other factors. I want to emphasize that the data collected using Route Safety IQ is privacy protected, only shared with an insurance carrier at the request of the fleet or the vehicle owner, and only the vehicle owner and others he may authorize can view the information recorded by Route Safety IQ. Available for Android mobile devices, the ATG Route Safety IQ app can be downloaded for free from the Google Play Store. We'll give you a link at the end of the webinar. So what are the takeaways from this presentation on lowering driving risk and reducing your insurance costs through telematics? Well, first, safe driving is no accident. It is a concerted effort on the part of an organization to return all drivers home safely. That safe driving culture starts at the top and flows throughout the organization, involving everyone, not just drivers. Second, the best safety programs entail a multi-part approach that incorporates measuring driving performance, monitoring vehicle and driver capabilities, mentoring drivers to improve performance and safety, and motivating them to keep at it. Third, a key element in any driving safety program should be data collection. In today's connected world, it's no longer a technical challenge to monitor vehicle and driver performance. Telematics now provides an unprecedented view of how, where, and when vehicles are being driven. And the novel new mobile app from ATG, Route Safety IQ, provides a great first step in gathering data to help determine just how risky or safe your fleet may be and how that may impact your insurance rates. Lastly, we encourage all fleet operators to share data with their insurance carrier, many of which offer incentives for sharing telematics data. At the very least, this data can help your insurance underwriter better understand your fleet's relative driving risk, resulting in a quote that rewards your safe driving program efforts. Thank you for joining us for today's webinar, Lower Driving Risk and Reduce Your Insurance Costs. To download the free Route Safety IQ mobile app and driving risk calculator, simply scan this QR code or log on to the Google Play Store and search ATG Route Safety IQ. For more information on ATG, please visit us at www.atgrisk.com. For Dave Melton and myself, I wish you safe driving.